Hey, what's up, everybody? It is Wednesday, December 16th. My new podcast episode is out, so go check it out. The link is right here in the description below. Just click on that link and you can listen to it. So, I got to talk about something. I am waiting right now for an 89 print in the dollar index. And the reason why I'm talking about this is because I took a lot of heat and a lot of criticism from many of you on this channel over the last couple of years when the dollar had a rally, and I said that was a rally in a bear market and you have to sell into that. I was saying the dollar's fundamentals are bearish and it will resume its downtrend, and all of what we saw like in 2018 and 2019, you know, the hysteria about the trade war and how somehow that trade war was going to result in some immediate reversal in the U.S. trade deficit. That was a bunch of nonsense. As a matter of fact, throughout the whole entire thing, we saw the trade deficit get worse. And alongside that, the second fundamental, which was, you know, hugely bearish for the dollar, I should say actually was the first fundamental, was the fiscal expansion. And certainly this year in 2020 with the pandemic, you know, both of those factors really increased to a degree or several degrees in magnitude. So you had, I mean, the conditions, I always talk about this. It's not about predicting the market per se, it's about predicting basic conditions. And, you know, if you understand what conditions are going to be based on, you know, policy, you know, economics, if you understand what conditions are going to be, you can strategize. You can have a position. And that is not something that is going to change week to week or month to month. So that whole entire rally in the dollar, which by the way, really wasn't that impressive. I think it was something like a 7% bear market rally. Maybe it was a 10%. That's about it. I mean, that by any measure, by any historical measure, that was a modest rally. And everybody was going crazy. Oh, the dollar, king dollar. Mike, you're wrong. The dollar's going to go up. The dollar, there's no other substitute for the dollar. And now I'm waiting for the 89 print. I mean, we went to 100. We went to 101. We went to 102. We went to 103. We're about to have an 89 print, and we're going to get an 88 print, and we're going to get an 87 print. Now, these things are not, you know, it's not linear. It's not a straight line down, just like it's not a straight line up. And I would say this, that the dollar's decline would be a lot quicker if we didn't have monetary policy the way it is right now. And I can talk about that because today was the Fed meeting, or the conclusion of the Fed meeting, and they're going to keep interest rates low until 2023. And they're going to continue to buy bonds, 120 billion a month. And how many times have I said those things are actually bullish for the dollar? So that is an offset to the bearish factors, which I just mentioned, which is the fiscal expansion and the trade deficit. So monetary policy right now, and the funny thing is, like, most people out there who don't understand MMT, they would look at that monetary policy and say, oh, you know, that's inflationary, that's hyperinflation, they're printing money, right? You got to sell the dollar. No, if that was just happening by itself without the fiscal and the trade situation that we're seeing right now, the dollar would be going straight up. I mean, all you have to do is take a look at Japan, where, you know, for years and years and years, the Bank of Japan has been buying trillions in government assets. And the yen is one of the strongest currencies in the world. Same thing in Switzerland. Negative interest rates of 0.75%, asset purchases. The Swiss franc is the strongest currency in the world. You want the flip side of that argument? Look at Turkey, where they raised interest rates to what? 1,000% or something, and the lira got crushed. So I mean, the general view, the broadly held view that kind of monetary policy is like bearish for the dollar, that's wrong. That's helping to slow the decline, but it's going to go down nevertheless. So I got to take a victory lap here. I'm sorry, because, I stayed bearish on the dollar for good cause, because the fundamentals said that was the case. And the same thing, we can have the same conversation about the stock market and the economy. All along, I've been saying the fiscal flows are everything. The fiscal flows are everything. And that is the determining factor in why the market continues to go up, why we have avoided a recession. Now, if that was not the case, if we didn't have that fiscal response, and who knows, it could go away. We got a new president. By the way, he's official now, right? Because, the state electors, they cast their votes, and he got the necessary electoral college votes, so he's in. Even Mitch McConnell even says he's in. Which before yesterday or Monday, he was like, I'm not answering that question. So he put the final nail in the coffin for Trump. So I'm taking a victory lap here. And I'll tell you when it's going to change. It's not like I'm hiding this stuff, and then when it happens, a year later I said, oh, remember back then? No, I say it. I say it. So, anyway, go to my podcast, and remember, you only have, half the month left now to sign up for a 30-day free trial of MMT Trader. The price is going up in January, so do it. What are you waiting for? See you tomorrow. Bye-bye.